Hello everyone, in this video we are going to start with a basic journal entries which we are going to pass at the time of amalgamation or acquisition or at the time of mergers. So these first journal entries are related to the closing entries in the books of transferee. So these are the closing entries. Got it? So we have 12 to 13 journal entries which are required at the time of acquisition. So these 13 entries are the major entries which we are going to pass while calculating the problem. So let's see one by one what are the entries we are going to transfer. All 13 entries will not be there. Maximum will be having 10 entries which is necessarily we are going to calculate. Remaining 3 to 4 entries will differ. It depends upon the problem what we are calculating. So the first entries for transfer of various assets including cash at their book value. Here we are going to transfer the assets from one company to another company. So the entry will be realization account debtor to concerned asset account. Here concerned asset account, how we are going to write in the sense to plant and machinery, to building, to equipments, like this. How many fixed and current assets we are having now? We are going to pass all the asset entries here and we are going to add all the credit side amount and we are going to write the total in the realization account. Got it? Next, for transfer of various outsiders liability. Outsiders liability means all the long term and short term liabilities, or else we can call it as current liability as well. For example, mortgage loans, secured loans, debentures, except equity shares, preference shares, reserves and surpluses. Excluding all these, remaining things in the balance sheet will be paid after. Okay, see, entries will be current concerned liability account debtor to realizations account. In first entry we are going to transfer the assets, whereas in the second entry we are going to transfer the liabilities. Got it? So next, for purchase consideration due, firstly we are going to transfer the assets and liability. Immediately we are going to pass the due entry for purchase consideration. So here transferee company account debtor, here you can mention the name of the company as well. So ABC Limited account debtor to realization account, which means how much value we are going to pay them, how much money we are going to pay to them. So we will be calculating PC first. Will be calculated first step itself, calculation of purchase consideration. After calculating purchase consideration, we are going to pass these entries, isn't it? So at the time how much consideration we have, that much we are going to pass it in the books of accounts. Okay, so fourth entry, for payment of realization expenses. At the time of realization procedure, there will be certain legal expenditures, that one we are going to pay them now. If it is paid by transferor company, means the entry will be realization account debtor to cash or bank account. These things will be directly mentioned in the question itself. So they will provide the details will be provided in question. So by reading the question, we have to identify which entry we are going to pass. Provided in question. So no need to worry about this. So next, see, for fourth entry, therefore for the payment of realization expenses, we have two different things. One is if paid by transferor, realization account debtor to cash or bank account. If it is paid by the transferee company, means the entry will differ. For example, For making payment, transferee company account data to cash or bank account. Second point, for collecting amount from transferee company means reverse entry. Cash or bank account data to transferee company. The name of the company you have to mention it there. So fifth entry, yes, for sale of assets not taken over by the transferee company. Sometimes the all assets will not be taken by the company. Just for example, the transferee company may exclude the debtors, may exclude furnitures. They won't purchase those assets. They will purchase plant and machinery, land and building. They will obviously occupy those assets. In certain cases, they will ignore few assets where the amount is very minimal or they don't require. Kind of where sometimes the company will not while acquisition, they will not acquire the furnitures, debtors and the stock. They will give it back to us. So during that time, what I'm going to do means I myself I'm going to sell those assets. So for that one, cash account debtor to realization account. So here the company itself selling those assets to the outside person. So cash account, why I'm debiting cash? Because I'm receiving cash. If I sell something means obviously I'm getting something, isn't it? I'm receiving cash. So debit what comes in according to real account, according to real account, it comes under accounting rules, isn't it? So according to real account rules, debit what comes in, credit what goes out. So that is the entry we are passing over here. Next, for payment of outsiders liability not taken over by the transferee company, including debentures. So the fifth entry is for assets not taken. Next, sixth entry is for the liabilities not paid by the company. So obviously a reverse entry. So realization account debtor to cash or bank account. In case for some secured creditor they have not paid. For example, so secured creditors they have not paid. For this what I'm going to do, I myself going to pay them, isn't it? So realization account debtor to cash account. Why I'm crediting cash? Because credit was what goes out, isn't it? So cash is going out, I'm paying my creditors. This is how it works. So asset entry will be cash account debtor to realization account, where for liabilities realization account debtor to cash or bank account. Next, first see, there is an orderly manner. You have to look into the journal entries. First journal entry, we are going to realize all the assets. Next, I'm going to realize all my liabilities. After that, third entry will be purchase consideration entry. See, PC entry. Fourth entry is related to the realization expenditures entries. After expenditures, if few assets and liabilities are missed by the company means I'm myself going to pay them. So for that, fifth and sixth entries we are going to pass. These entries will not be in every question. It may differ. Okay. So after paying all the liabilities, after selling all the assets, I'll finally come to the shareholders part. So in case of preference shareholders, we'll do the entries like this. So for preference share capital, due entry. So this is due entry. I have not yet paid them. So due entry. See, payable value at par. What do you mean by par? Par means value, normal value of shares, preference share. For example, 100 each means 100. So during that case, preference share capital account debtor to preference shareholders account. Next one, payable at higher value, which means a premium. Premium means the value of share is valued at higher value. For example, the preference share normal value is 100, but in premium how much I'm going to calculate? At the market value 130. So the 130 rupees is the premium value. During this time we are going to calculate like this: preference share capital account debtor, realization account debtor to preference shareholders account. See here, the capitals account are debited, isn't it? Why it is debited? Always capital and sales always in credit side, isn't it? Why we are debiting here? Because we are redeeming their capital, we are repaying them, isn't it? So at the time of acquisition, the new company is going to pay to the shareholders. They are purchasing it. During the time of purchase, we are going to reverse the entry. So capital account debtor to the respective shareholders account. So this is how we are going to pass the entry. Whereas you have to understand the concept that if it is paid in the premium value, means we are going to debit the premium value. So first entry with the face value and second entry will be with the premium value to the preference shareholders, we are paying them. If at the discount means at lesser value. For example, the capital is valued at 100. Due to some market conditions, it is valued in lesser value. Just for example, it is valued at 80. So the 80 rupees is the discounted value. So preference share capital account debtor to realization account with the discounted value 20 rupees, you have to mention there, to preference shareholders account. So debit you will be having 100, for credit 20 and 80. So this is the discount value in this entry. So share capital 100, 30, total credit amount will be 130. Got it? So this is how we are going to calculate it. So these are the basic entries. In case in your question if they have not at all mentioned preference share capital, means these 7th entry will not be there. Understood? So this is how it works. So next, finally I have paid. So this is the entry for the closing realization account. So we are going to close all the accounts. Finally we are going to pay to the equity shareholders. So realization, in case of profit, while calculating a realization account, if you have any profit, means we are going to share it with the equity shareholders. If you have loss, means that loss also will be borne by equity shareholders itself, because they are the owners of the company. So in case of profit, a realization account debtor to equity shareholders account. So vice versa entry for the loss. So equity shareholders account debtor to realization account. Got it? So closing entry. In closing entry we are going to transfer the profit or loss. Profit or loss. Here any one entry will occur. At a time we can't enter both profit and loss. Either one financial year the company either can earn profit or it can sustain loss, isn't it? Any one will happen in the company. So either of the entries will be entered in the books of accounts. Next, only few entries. Next, for transfer of preliminary expenses, underwriting commission, discount on issue of shares and debentures and P&L account losses, etc. So these are the preliminary expenses, underwriting commission, discount on issue of shares and P&L loss. So these are the certain items which will be in the balance sheet. Balance sheet asset side it will be assets, and liability side it will be reflecting. So we are going to transfer all these things to the equity shareholders account because they are the owners, isn't it? So equity shareholders account at R2, we are going to write off all these expenditures. So why we are writing off all the expenditures? Because we are going to close down the company's books of account. During that time, all the expenses and liabilities, assets and income has to be transferred, isn't it? So here these are the capital expenditures which occurs at the time of commencement of the business. So these expenditures will be write off every year. So this will be obviously at the time of mergers and acquisitions time, we are going to transfer it to the equity shareholders account. It will not reflect in preference shareholders account. It in fully borne by the equity shareholders. Okay, so equity shareholders account, in case they have given in the question, means we have to pass this entry. If in question they have not at all mentioned, mean we should not crack our heads for this entry. We entirely ignore this. Okay, two preliminary expenses, two return, any one or two will be given in question. Maybe they might have given preliminary and P&L account loss, or discount on sale of shares or debenture, any one they will mention. These are the major things that will come. So these are the entire concept I have given. So next, sorry, so last three entries. So for receipt of purchase consideration, so we are going to finally pay back them. So equity shares in transferee company, debtor, preference shares in transferee company account, debtor, cash or bank account, debtor to transferee company. So in question, if they have given cash and bank account, in the sense we are going to enter it. For example, purchase consideration paid 50,000 as cash, remaining are transferred as equity shares and preference shares they have mentioned, means these three things will be entered. If they have given direct cash, means we have to enter only cash account data to transferee company's account. If in case in question they have not at all given preference share, means we can entirely ignore preference share capital account in the books of account. Got it? So any two or all three can given in the question. It depends upon the question what you are solving. So finally, for final payment made to the preference shareholders. So previous entries we have made the due entries. Now I am paying them the cash or the shares. Okay, so preference shareholders account debtor. So here in these entries I'll show you. Yes, in these entries I am going to calculate how much amount has to be paid to preference shareholders. So this is capital due entry here. So here what I am going to do, I am going to make the payment to the equity shareholders. How I am going to pay them? Either through cash I am going to pay them, or through equity or preference shares only I am going to pay. So preference shareholders account debtor, the value which I have calculated earlier, to cash account or to shares in transferee company's account. See, if payment is made by the distributing shares, if they have given by distributing shares, means we have to pass this one, or else we should not write this. We have to directly entry, we have to make the cash entry only. Finally, final payment made to the equity shareholders. So equity shareholders, we are going to pay them. Equity shareholders, how we are going to pay? So entry will be equity shareholders account debtor. So I have already calculated here equity shareholders account will be calculated over here. That one will be paid here. Okay, so equity shareholders account debtor to equity shares in transferee company or cash or bank account. This is how we are going to transfer it. So very easy, only 13 entries. In these 13 entries we have an order manner, isn't it? First assets realized, liabilities realized, second point. Then we have PC. After PC we are having liquidation expenditures in case they have given in questions mean. Next, assets and liabilities not paid by the transferee company will be passing. After that we are having, I'll show you it. Yes, after sixth entry we are going to pay to the preference, we are going to pass the due entry for preference shareholders and equity shareholders. After two entries, finally we are going to make the payment for the purchase consideration and payment for preference share and payment for equity share. So these are the 13 entries where we are going to pass while the closing the books of accounts. Got it? So next new concept, only 4 entries we have. Opening entries in the books of transferee company. Transferee company means the company which is purchasing the another company. So this company will be in the majorities. So only 4 entries will be there. First point, for purchase consideration due entries. So here we are going to create business purchase account debtor to liquidators transferee company's account. The due entry what we have calculated in the closing entries, no, the total entry we are going to pass it here. So we will write the total value of PC here. So value of purchase consideration will be written here, and how they have paid us, that entry we are going to pass it with the amount of purchase consideration due. Yes, as I said, with the PC due entries we are going to pass it in the opening books of entries. The first entry itself, PC payment entry. Next, for incorporating assets and liabilities taken over. So how many assets and liabilities taken by the company, that entry will be passed over here. So see, various assets taken over. So how many assets we had, that entry. For example, plant and machinery account debtor, building account debtor, stock account debtor, inventories account, or you can say furnitures, equipment, all the assets account debtor. We have to mention each assets. In case if they have given 10 assets means we have to mention all the 10 assets there. Debtor. So wait, this one will be not at all entered. We have to wait till all the calculations. Firstly, we are going to enter all the assets. After that, I'll pass all the liabilities what the company is taken over. For example, debentures, maybe creditors, secured loans, preferential creditors. So if they have 5 different liabilities taken over by the companies means 2 debentures, 2 mortgage loan, 2 secured creditors, 2 unsecured creditors, all those things will be entered over here. Next, 2 business purchase account. Business purchase account means the value of PC will be written here. So value of purchase consideration we are going to write. So we are going to compare the assets and liabilities. So I'm going to add, firstly I'm going to add the debit side, all assets value. Also I'm going to add credit side with liabilities and purchase consideration. So I'm going to compare my debit and credit side. So whichever is highest, that value has to be written. In case liabilities are more means, in case I'll write here, in case liabilities, sorry, in case of writing liabilities I'll just write in case credit side is more means I'm going to consider the balancing figure as, I'm going to consider my balancing figure, I'm going to transfer it to the general reserve account. So general reserve account debtor to how much balancing figure you got, that much I'm going to write it here. For example, if you have debit side 5 lakh, only 5 lakh you are having, but assets taken over by the taken over value by the company is 5 lakh, but your liabilities are 6 lakh and PC is 1 lakh. So total credit sides we are having 7 lakh. So how much balancing figure we are having here? 2 lakh, isn't it? So here I'll just write 2 lakh in debit side. I'll just mention it general reserve account balancing figure. So total 7 lakh each. In case of credit side more means, suppose if your debit side is more, in the sense, if debit side value is more means, we are going to write it in the credit side. If your debit side value is 8 lakh now, during that time this entry will not be there. So your total liabilities, like various assets liabilities taken is 5 lakh and PC is 1,50,000. So how much total we are having? Debit side we are having 8 lakh, credit side I am having only 6,50,000, isn't it? So how much balancing figure I am getting from the credit side? 1,50,000. That 1,50,000 will be transferred to again general reserve account as a capital gain, because my assets value are more, isn't it? Are you getting my point? So very easy concept. We are going to add both the sides. Any one entry will be there, either capital gain I will be having, or I will be having only capital gain or capital loss. Any one will be there, either of the one. By adding and getting the balancing figure, if you are getting balancing figure in debit side means capital loss, because your liabilities are more. If you are having credit balance more means you are having debit value is more means we are having capital gain, isn't it? Because your assets value are more. You have to understand the concept. So final entries. In case of amalgamation in the nature of purchase method, we have two methods. I will explain you that. So various assets taken, same entries, no other further. Here directly I am going to entry as a goodwill and capital reserve, same as above mentioned journal entry itself, but here I am going to mention it as a goodwill account. Directly I am going to mention as goodwill account in case of balancing figure in debit side. In case of balancing figure in credit side, I am going to transfer it to capital reserve. Only that entry will be changed, no other entries. Okay, next, for the incorporation of statutory reserve. Incorporation of statutory reserve means if any reserves are taken, that will be passed in the entries. Amalgamation adjustment account data to statutory reserve. Next, for discharge of purchase consideration. So discharge means how we are going to pay the purchase consideration. So how they are going to pay them? Discharge of purchase consideration. The liquidators of transferor company account data to through share capital or through securities premium or through bank account. So how we are going to pay them the purchase consideration? They will clearly mention in the question. The company paid 3,000 equity shares at the value of so and so, and as a cash 50,000, 70,000 they have paid in lump sum. So they will clearly mention. So based on the question, we will pass the entries. Okay, these are the 4 entries. So these are the 4 entries which we will pass at the time of opening entries in the books of transferee company. So totally maybe 10 to 11 entries in the closing entries, and these 4 entry compulsory entries will be in the transferee company. Totally 15 entries will be passing. Along with this, they might ask the balance sheet also. So balance sheet in the books of new company. So we are going to pass the we are going to calculate the balance sheet as well. Very simple concept. So beginning we should know the basic things. That's why I have started with the format of journal entries. What are the basic entries that we are going to pass? So major entries we have discussed in this video. So in next video I'll start with the problems. I'll start with the very simple problems. We'll understand the questions and we'll analyze the things over there, and one by one we'll start with the difficult one. I hope everyone is understanding the things and understand the concept. I think so. If you like this video, please like and subscribe to my channel. Thank you.